Alright, this is going to be a really short video than I expected or planned, but all I was going to talk about really fast is basically tight channels, small pullback trends. The biggest issue with, a day like today where you have this and this is that number one, let me just see something real quick. Okay. You've got to compare the pullbacks to the strength of the move. If we think about it, the market cycle has a spike, channel, then a trading range. Here's the spike, here's the pullback, and here's the start of the channel. Inevitably, there's three pushes: 1, 2, and 3. One pullback, 2 pullback, 3. It's a double top. So it's important to pay attention to the other side, the pullbacks. So arguably, from bar 1, it's always in long. You buy above it. I didn't. I don't know if many people would, but pick a bar. I think it's reasonable to buy above this bar, stop down here, but you've got to ask yourself, what do you expect here? When you see this, price rocket down, it's important to notice the high was 79.75, this low was 78.25. So bulls, bears easily made money selling above bars, and this is weak. So number one, I would say that this is pretty disappointing rally. If we look at a 15-minute chart, it looks like this. This isn't that strong. I don't know what has. Excuse me one second. Okay, I know what's happened. So, guys, just in case you were wondering, today is currently the 7th, and it is technically rollover day. As you can see, you cannot see it on my screen. I have it actually blocked out. But we have just switched over to the December contract, which is the Z contract for the Emini with TradeStation. What I was wondering is, if you look right here, all my stuff is just really messed up. My lines are messed up, and I was wondering, what just happened, because all my stuff's gone. So I'm going to go ahead and I like the continuous contract. I'm just going to go ahead and delete everything. I'll remake it tomorrow during the day. So anyways, I'll just deal with that later. I want to go back to the, well, it actually should not even matter because it's still the U contract. But anyways, when your lines shift, the reason is because price is being refactored, as you can see. I'm sure right now it's different. We're not technically, the price will change. But anyways, different. So, sorry about that. At this point, we've got a breakout. It's always in short. And you can see we're at the low of the day. Pretty strong spike. I want to, pick a chart. It's maybe a 10-minute chart. It's 2 decent bull bars. Probably a second leg down, so we'll probably get a channel down. So if you sell here and put a stop up here, you'll probably make money. 60% trade. The only way I'd get out here is if this happened over here. If we got a really, really strong bull reversal. But we didn't fall below this low, and today we fell quite a bit below it. So don't be paralyzed and be afraid of the pullback. Just say, you know what, gee, this bar right here, it's a one-tick bull body. The bulls need to at least, get strong consecutive bull bars to reverse this. Probably a second leg down. And you can see right here, big tails, we got our second leg. Here, decent bear breakout, maybe 3 pushes down, 1, 2, 3. Failed bear breakout below bear channel. Some bulls will get out, but if they get out, they're going to look for a second entry short here. And we got another push down to here. Now we have 3 pushes. 1, 2, 3. Spike and channel. So spike, pullback, and then to a channel. Channels usually take, test back to the opposite of the channel and form double top, double top bear flags in this example. So at this point, clear wedge bottom, clear trend channel line overshoot from here, or here at the 60-minute moving average, decent buy. This is what I want to talk about. For instance, when you see this, you shouldn't be scared to hold after sure, it's reasonable to get out, but this pullback, if you look from the low to the high, 74.75 to 76.75, it's a 2-point pullback. This low is 73 to 75.5. So it's only a 0.5 difference in the pullback. So it's a fairly tight channel. Now, with that said, it is weak and there's a lot of disappointment sideways, but it's still tight. Then we get another bear breakout. So at this point, probably 2 legs sideways to up. Probably will test up to here. Maybe the open of the day. They correspond pretty close to the same price. Makes me think it's more of a magnet. We'll get up there. Pretty strong breakout, always in long. And then you say, well, gee, it's at the moving average. Sure, maybe you get out here, but if you do, you got to get long again. I would not get out there because, for one, bad follow through and big tails. And if you look at this pullback, look what happened. If a bear went short, they got short at 73 even. They need 71.75 to get on out with a profit, and then they didn't come close to that. Price went to 250, so price only went down 3 ticks. 3-tick pullback and breakout test to here. Price went higher, and you can see these pullbacks are fairly small. This high is 74.50 to 72.50, so a 2-point pullback from the high to the low. I'm talking kind of fast because I'm tired and I need to go to bed. This is later than I wanted to make this video. But yeah, so it's only a 2-tick, it's kind of similar to over here. When you look at this high to this low, it's a 2-point pullback. So you think, okay, we'll probably get another pullback of about 2 points, maybe 2.5 points. So shorting right here, let's take this example. If you short right here, you're selling 5 ticks below the high of the pullback. So that means, let's say maybe you get another point. Well, you need 2.75 ticks to scalp out with 1 point. Probably not going to happen, and here's why. This high is 76, this low is 74.50. So if this pullback was only 2 points total, this one might be 3 points total. Well, doesn't give you a lot of room to work with, especially when it's at the moving average. So that's why bulls will hold through this. It's very easy to get out, get back in, get out here, get back in, get out, get back in. You'll get chewed up, and then you won't make really that much. So it's kind of similar to, over here is even a good example. Look right here. Kind of a small pullback, and then we get a strong bull breakout, bad follow through. We get 3 pushes up, 1, 2, 3. We broke above this high and returning down, so I think a lot of bulls will get out. But if you notice, the best the bears could do is make a 1-point scalp. I want to pay attention to that. I want to point out this day as well. So this is very similar to today, but we had a gap up, and this was kind of weak. And if you look far enough over to the right, it was a failed. I just lost my place. There we go. It was a failed breakout of this lower high. We went up above and we're starting to turn down. So you have to think about the logical resistance support. Probably here, maybe yesterday's close, maybe down here. Bear breakout, probably always in short, probably second leg down. But we still have yet to fall below this low, and there might be sellers at the moving average. So you have to expect disappointing follow through. Decent bear bars, but preferably the bears need 3 to make it clearly always in short. So there's always the possibility of a double bottom measure move up, but probably 40%. And if you look right here, there's probably going to be a second leg down, and it might be a 50% pullback. So if you buy above this bar, 50% is right here. So think about the logic here. So far, this pullback is 2 points. Okay? Let's assume, arguably these bars are big enough to possibly be scalping for 2 points. So let's say you even go for 1 point. Well, you would need a 4-point pullback. So you would actually need 475 to get out 1 point. That's all the way up here. and that's only 1 point, and that may not be good enough for a scalp above this bar. Most of the bulls are buying this close and scalping out. I know that because, well, this price, oh, well, I mean, sorry, I had to kind of count for a minute. Price went exactly 3 points up, so you have to be aware of that. And even so, if you look right here, this low 71.25, this high 74.75, so a little over 3 point pullback. And you have to think, okay, maybe we'll get a 4 point pullback. Well, right here, this bar is nearly 2 points tall, so it's going to be hard to buy for a scalp, and it's below the moving average. And then you get, so it's kind of a small pullback trend if you think about it. And if we look at a smaller time frame chart, it looks like this. Small pullbacks. Yes, it's important to be aware of how long the pullback lasts, but you have to be aware. A lot of times you get small pullbacks that don't go far. They don't pull back far, which is still a small pullback. So be aware of that. So we have a spike, we're pulling back, bear breakout below spike. It's similar to today over here, right here. When this happens, the bears need a strong follow-through bar. They don't get it. So at this point, you're thinking, well, gee, maybe a second leg down. Some traders will get out, and then they'll look short again. Others will get out here. We'll close this gap. This pullback was, if we look at bulls making money, if they bought above a bull bar, you can see they easily made a 2-point scalp. Price went up from 67 to 70.5, so at least 4 points up. We'll probably do that again. So we're probably developing some sort of parabolic channel, maybe. We're forming a wedge. It's multiple pushes down, sell climax, sell climax, sell climax. Probably sideways to up, maybe test the top of the channel. And that's what we did on the next day. So at this point, a lot of bulls will get out. And then here's a good example. It's hard to hold through this because it never looks good enough. But look at the pullbacks. So far, the biggest pullback after these 3 bars was less than 2 points. And then, do you really want to sell below here? No, it's, probably buyers below. So 70 even to 68.50. Well, less than 2 points. No pullback. Here's a pullback that arguably was 72.25 to 70. So exactly 2 points. So even here, this pullback, 72 even, probably not even going to be a 1 point scalp, because if it went 2 points, if you're selling right here, you need, well, there may not be enough room. And arguably, I get it. You could say that bears got a 1 point scalp, but really, I don't agree with that. The bars are, well, you could argue maybe a 1 point scalp's the minimum. Kind of, that's up in the air. I think, truth be told, it's bears selling this high at 70.50, scaling in higher at 2 points. And this is why I'm thinking that 2 points is more of a scalp, because, for instance, even here, the high was 70.50, price went 70.75, 72.75, which tells me bears are scaling in 2 points higher, scalping out. So, pay attention to that. Because that's important, even, So, right here, bulls bought above this bar at 72 even. They need 72.25. They need 73.25. They didn't get it. Let's look right here as kind of a good example. Or any of this day. So here's the open. We're kind of, arguably always in short from here. Deep pullback, but 450, 550. The bulls cannot make money buying above this bar. We got a bear breakout, clearly always in short. So far, these pullbacks are only 2 points from the low to the high, so not very big. So even here, see, 58.25 to, maybe this is 2 points. So you got to think, okay, how much bigger will this pullback be? It's probably not going to get 4 points. So if I buy above this bar, the pullback's got to get exponentially bigger when it hasn't. So it's probably not a good buy. Same thing here. The pullbacks just aren't big. Nope. Bulls have yet to make a 1-point scalp. And then we got, a sell-off, so a spike, pullback, and another spike. Are we really going to get a bigger channel down? Probably not. And then you can see, so spike, channel down, arguably a spike, small channel down, 1, 2, and 3. So sell climax, sell climax, sell climax. It's getting parabolic. So you have to think, yes, the bulls are not making money above bars, but this is very parabolic. Bears are going to want to take profits because the risk is big, and it's kind of a gift. So a lot of bears will get out here above these bars. Some will get out below, and they'll think, well, we'll probably test up to here, which we did. So, with that said, let's say you buy above here, put your stop down here, and you have a target up here. Well, pay attention to the pullback. If you sold below a bull bar, and you got to remember, the probability is less when you sell below a bull bar. Sell below this bar at 525, so your entry would be 475. Price needs to get to 375 or 275. So right here, it went exactly 1 point. Now you've got to ask yourself, okay, is the minimum scalp 1 point? Well, probably, but realistically, I think more bears would sell below a bear bar. Maybe debatable, but probably second leg up. Well, okay, so still, this pullback was 57 to 53.75. So what? It's about 3-point pullback. So you've got to kind of wonder, when the channel's getting very tight, maybe there might be a 1-point pullback, or a 3-point pullback. Here's 61.25 to about 57. Where I'm getting at, and also, arguably, always in long here, maybe that's a spike channel. You're getting pushes up, here's a spike, maybe 1 push and 3 pushes up, so wedge, 1, 2, 3. So sure, I think it's reasonable for a lot of bears to get out, bulls, for a lot of bulls to get out, ret targets. But we pull back about a point. And, so what if you didn't get it long here? Well, if you buy here, you've got to realize, okay, through these bars, pullbacks are really small. First pullback is over here, but it's late in the day. So yeah, pay attention to the size of the pullback. That's really all I'm kind of getting at. Even here. So, alright, I'm about to have to end this video, but so always in short, bear breakout, clearly always in short. First, probably second leg down, so sellers above. Bulls may get out here, but at the same time, some will wait to see if, the bulls can make a 1-point scalp. Bears will get out. And maybe they make a 1-point scalp. Arguably they did. Exactly. And then we got a low too short. So bulls are still scalping. And then here, you buy here. Bulls failed to get a 2-point scalp. So, it's kind of telling you that we may be starting a channel. We may get a deeper pullback and maybe moving average gap, bar short. But even here, tight channel, so probably won't have a deep pullback. These pullbacks are tiny, so buying above this bar doesn't make a lot of sense because the pullback's probably going to be small, and it's more likely bulls buying at 65.50 and getting out at 66.50 for a 1-point scalp. Same thing over here. So far, the deepest pullback has been less than a point, so this probably will be less than a point. And here, and then finally we got a huge bull bar, closed the gap, still led to more up. So pay attention to pullbacks. That's all I've got. Thank you.